with us. Let's get on board our first query for the day, and this one is coming in from Shiva. He's saying he's holding 200 shares of HPCL, which he's purchased at 380 rupees per share. He bought it a few years ago, so now he wants to know whether he should exit on a higher level, add on dips, or stay put with his holding in HPCL. What's your take, Kunal? What should Shiva do with HPCL holding? He's bought 200 shares at 380 rupees per share.
I think you can continue to hold. The markets are going through a rotation phase. PSU stocks are doing pretty well. Crude oil is also rising up, and on the boil, just around at $80 in terms of Brent. So I think on all of these factors, I would expect HPCL and many of these OMCs to perform pretty well for themselves over the near term. So we'll suggest to hold.
Okay, the next one is on a stock that we've discussed in the recent past, gentlemen. And this is on PVR. I'll come to you on this one, Rajesh. Mr. Gopalakrishnan is asking about PVR. He's bought at levels of 1556 and he's wondering what the medium term outlook for the stock is. Should he hold on?
Basically, this stock is a trader's favorite stock because of various factors. Where, as far as fundamentals are concerned, I'm not very too much excited about the fact that Maharashtra has allowed theatres to be opened by 22nd of October. The problem is there will be a dearth of content because a lot of producers would be reluctant to release their films because of the fate which we have seen in the recent past of Akshay Kumar movie Bell Bottom being getting only 16 crore odd rupees of revenue at the box office. This because even if content is released, there would be people who will be willing to come to theatres back. So there are a lot of ifs and buts that may take at least 18 months to 24 months to give some kind of returns in this stock. It's better to put a stop loss and carry on with the levels. And if the stocks move to maybe around 100 rupees more from the current market price, one can think of booking profit and moving to some other sector.
Alright, this one is from Rishikesh and he wants to know about IRFC, whether it is a good stock to hold on to or should he go ahead and exit because he already has 1,000 shares which he's purchased at 23.65 rupees per share. Kunal, do you have a take on IRFC? I know that it's fairly a recently listed counter. So do you have a take on IRFC? And if yes, then what should Rishikesh do?
Well, yes, the recent history is just about I think 8 or 9 months for IRFC. So very difficult to predict what the forecast could be over the longer term charts for IRFC. But then whatever the stock has shown in the last 8-9 months, I think doesn't indicate of a major kind of a turnaround stock as such. I think it's been a stock which has gone through a pattern of lower highs and lower lows even in the last 3 to 4 months of this price correction for IRFC. So I would suggest that you can look to switch from this stock and getting back into a lot of quality names. There are phenomenal set of stocks from the large cap names which are still available at good discounts from their long term highs. So I think in that sense you should make a switch.
Okay, this is a bit of a strategy based question for you, Rajesh. It's from Sudha from Ambernath and she's asking, should you ride the uptrend in the markets or should you sell some stocks? Should you book profits and keep the powder dry anticipating a fall? And I think a lot of people, Rajesh, have advocated an SIP strategy. She's also asking specifically about metals. Should she use the recent downtrend to add into stocks that she currently has like Tata Steel, JSPL, Hindalco, JSW Steel, or should she add names like Nalco and SAIL? So overall a view on the metal space.
See, as far as booking profit and coming out at this point of line, you never know when this uptrend is going to end. And I don't think it's in the near future we are going to see some kind of crash. There may be correction of 1,500 odd points here and there. 10% correction is quite obvious after the kind of stellar run. So one should not be worried so much if one is an investor for a longer term horizon. Maybe a trader could build a strategy and all. The biggest risk in market is not being into market, as I have already said. I have met people who have booked profits around 11,000, 12,000 odd level, fearing that would be a there would be a fall, and now we are sitting at 70,000 odd level. So it's no point timing the market. You stay with your stock, focus on your stock where the quality is good, be with it. And as far as metals are concerned, yes, we are very bullish on metals, even after this kind of stellar run up. And with this kind of stocks like Tata Steel, GSPL, Cell, one needs not worry, because we all know the next 2-3 quarters numbers are going to be good because of the good realization, the capacity expansion, debt reduction that almost all the companies have taken. So numbers will be good. There would be a good amount of upside from the current market price, maybe a 20% upside from the CMP on Tata Steel or JSPL is quite possible. Even SAIL is a good bet. Hindalco, yes, we have seen aluminum price trading at an all-time high. So one should very well be with these stocks, and if there is some kind of correction, one can even add to that.
Okay, this one is from Marion Portman, and there are a list of stocks that Marion has given. But Rajesh, I will request you to stick maybe one or two, saying that holding Bandhan Bank, Bharti Airtel, IDFC First Bank, BPCL, LIC Housing Finance. How are these stocks fundamentally? And if sooner or later correction happens, then should I sell or hold on to these counters? What's your take, Rajesh? The stocks that Marion has in the holding is Bandhan Bank, Bharti Airtel, IDFC First Bank, LIC Housing, as well as BPCL.
Cheryl, almost all the stocks are of good quality, and I don't think there would be there should be any panic if some correction happens if one is a long-term investor. And as far as stocks, some of the stocks like Bandhan Bank or LIC Housing or IDFC Bank, I would say they have not participated in the rally as such. If you see the prices, they are still trading at much below their 52-week high, and there are a lot of potential to that. If we talk of LIC Housing, the numbers have been pretty good. It's a good parentage. One can continue to hold. Even in Bandhan Bank, with 4,000 odd branches or banking outlets, out of which thousands of branches and 3,000 DSCs, this bank is also going to do well with government intervention of Assam issues. So all of them are good stocks. I think one should continue holding to that. And if there is some correction, one can even add to LIC Housing or BPCL.
Okay, so the next one's for you, Kunal. Sorry to keep you waiting. Gujarat Gas is the counter. We've got Sanjay Mishra who wants to know. He's holding 500 shares at levels of 630. He's asking whether the stock has a prospect of going higher in the near term. What are the levels that you're looking at?
Typically, I've seen that many of these stocks who go through, a very, I would say, gradual kind of a downtrend. They're the ones which which remain under selling pressure for quite some time. There are charts which probably indicate that these stocks can also go below their long-term averages and sustain and stay below those averages for some bit of time. So what's happening for Gujarat Gas as well is very, very similar. From 750 levels from the August peak, the stock is gradually moving towards 600, 610 where it's currently trading. It's also just about in touching distance of testing its 200 moving average as well. So looking at the structure of the downtrend and the very stable kind of a move, I would expect that this could be some sort of a distribution which could be happening into the stock price, and possibly the stock can even try and come back towards 550 levels as well. So if you're looking to average, then I think you should wait and let the stocks correction settle down closer to 550 is where I believe could be a better level to average Gujarat Gas.
Kunal, this query is for you. I'm from Ajay. He's saying that Nifty PSE sector is on the verge of a major channel breakout, and so are most of the stocks. So what do you suggest buying? Is it individual stocks or PSE ETF?
You can look to buy PSE ETF. I think that's a better play. But if your research is quite well in terms of whether you're looking at it more of a technical breakout or a fundamental kind of a up move, then I think chipping onto these names as well on the individual PSE stocks, they could also turn out to be very, very handy, because if you can latch on to a few of the probable outperformers, then the alpha which you can generate from these stocks could be far greater than how the sector can move up. But yes, the observation is right that the PSE index is heading towards a very strong breakout. It's not just a channel pattern breakout, but it's more to do with a strong moving average breakout, which has happened for the PSE index, and something which was very rare. The last time I think we'd seen such a kind of a breakout for the PSE index in terms of the moving averages was somewhere in 2015 end and 2016 start. So by that you can expect and fathom out that the breakout could be more of a longer term breakout rather than more of a short lived breakout.
All right, we've got the next question from Mr. Chawla. He's asking about Aptus Value Housing Finance, and this is a recent listing. It's under pressure today. In fact, it's not done particularly well in the recent past. Rajesh, I hope that you have a view. He's bought at slightly elevated levels, but he's losing about he's losing about 50 rupees on each share at this juncture. He's wondering whether to hold on. Can you give him a view?
The stock had a very bad run since its listing, because when it got listed at that time, the mood of the market was pretty bad and everybody got stuck. Secondly, this is a regional player in housing finance company, although the valuations are good. But what I would suggest is, instead of being with a regional player, why not switch this money into LIC housing? So if housing finance starts moving up, LIC would be a better play to pay into it. So if he's not sitting in a very big loss, I would suggest switch from Aptus to LIC Housing Finance.
Okay, this one is from Satish Shah, and he's saying that he's holding AIA Engineering for the last 5 years. He's saying, what are the prospects? Kunal, I will take this question to you. AIA Engineering, for 5 years, Satish has been holding on to this counter, though he's not given us the buy price or the quantity of the stock. How does it look on the charts? If he wants to reconsider about his holding, what should he do?
I think it depends on what part of the entire portfolio is the holdings for AIA Engineering. If it's a very smaller portion of your entire portfolio, then I don't believe that you should maybe tinker on to your investments over here. The stock is going through its own stable speed of an uptrend. It's not a high beta stock that you would probably expect when going to moods of 3x 5x kind of rally, specifically in the last 13-14 months. But then right now as well, the stock has recovered quite well from 1200 levels in March 2020 towards 2200, which it tested just about a week or two back. So I think it's done pretty well for itself in that regards. 5 years as well, the stock has done quite well from a level of 1200. Again, the stock has moved up towards 2000 levels. So it's been a consistent kind of a stock. I would suggest that if you're looking to churn and change the stock, and specifically sticking towards mid-cap name, then why not look at maybe a KEC International at current levels of 445, 450. That could be a much better bet, purely on the basis of long-term and quality in terms of mid-cap. So if you are looking for a switch, then I believe KEC International could be better. But if you can hold on to AI Engineering, say for another couple of years, then I believe you can get that standard compounding as well, like what you've seen the last 4-5 years.
Okay, first of all, this is appreciation coming in from Bengaluru for you, Kunal, from Suresh Vasudev. He appreciates your professional views and thoughts, your high standard professional views and thoughts. Now, he also wants a view on Rain Industries for the short term. Should he consider getting into this counter?
Absolutely. I think, what Rain Industries has done, on the charts, specifically more on the monthly charts, Alex, is a big breakout of a what we typically call it as an indicator, as a parabolic star indicator. This is a huge breakout for Rain Industries, and something which had last happened, I think, in 2016 for the stock, when it was just about 60 rupees or 70 rupees at that point of time. And from there, the stock had gone to levels of 400, 420 plus. So it's a very similar kind of a breakout for Rain Industries, coming out after almost 3 years or 4 years of consolidation for the stock. So I believe purely from that aspect, you can look to buy and hold the stock from a long-term view.
This one is from Shashwati Chaudhary, has 150 shares of Glenmark Pharma, purchased at 534 rupees per share. What should I do for the medium term? What's your take, Rajesh? All of a sudden, no one is talking about the pharma space of late. Now it's all about autos, or it is about the reopened trade. But Glenmark Pharma, Shashwati is holding 150 shares at 534 rupees per share. How does the counter look over the medium term?
With Indian markets is that pharma and FMCG has always been traditionally been safety play when market is not moving here and there, then people tend to move towards FMCG and pharma, and that is the reason nobody is talking about pharma as such. But as far as Glenmark is concerned, with the kind of product profile they have, the kind of products they have, and the numbers have been pretty good, I think one should continue holding to the stock.
Okay, gentlemen, I would encourage you to keep your answers slightly shorter, like Rajesh, you just did. Thank you so much for that, because we've got tons of questions that are piling up. This next one is also for you, Kunal. Jubilant Ingreva is the name of the stock. We've got Rajesh, who's got 20 shares at levels of 730, which I think is more or less close to the current market price. Should he hold on for the short term though?
I would suggest closer to 680 if it's in a slightly short term kind of a view, and targets you can keep it closer to 820 for Jubilant Ingreva.
Okay, this one is coming in from Srinivas Rangaraju, saying that he has 20 United Spirits shares which he's purchased at 690 rupees per share. He's a long-term investor but wants to know whether he should continue to hold on to the counter or sell. Rajesh, we've seen a massive rally coming about United Spirits, no doubt. The CCI, the order also is there. It's an overhang on the counter. But if you were a long-term investor, makes sense to stay put with United Spirits?
If CCI order is there and some negative sentiment is there, it would be an opportunity to add, because festival day demand being just around the corner, I think the stock is going to do well. One should add on declines.
Okay, Polyplex is the name of the counter, Kunal, and we've got Puneet, who's gotten at levels of 1780, which is slightly elevated levels. He's looking for a very short-term view for the next 10 days or so. One, would you advise him to expand his time horizon? And two, should he hold on?
He's bought at a higher level, so that's the point number one. The other is, if you are looking at it from a short-term view, I would probably believe that the stock is consolidating. May not show any major kind of a price uptick unless you've seen the entire market and the mid-cap and the market as well going through a much more stronger recovery phase. Then probably you could expect a breakout. I would suggest keep a 3-day low as a stop loss for Polyplex. I think 1670, 1665 would be a good stop loss for your trade. If the stock doesn't break that level on the downside, then you can continue to hold on for your expected time period.
Actually, I stand corrected that CCI order was on United Breweries and not on United Spirits. But moving on to the next query, this one is from KR Balan. He's saying that he has alkyl amines. He's saying it's corrected more than 10% from the highs. So he wants to know, should he buy this counter for the medium term, or is there any other better stocks that he can look at current price to buy? What's your take, Rajesh? Do you think alkyl amines makes sense to buy this counter given that it has dipped? And how are the prospects of this stock looking like going ahead?
Sector as a whole has done extremely well. Alkyl amines have been the leader in this rally in the chemical sector and has done well. 10% correction is quite possible. One can hold on to his existing stock. But as far as adding in concerned, I think there are various other stocks which are trading at a much lower valuation. For example, one can have a look at GNFC or a Deepak Fertilizer, which again have a lot of chemical divisions in that, and that's doing extremely well, trading at a much lower valuation than alkyl amines. So one can have a look at both of them.
Okay, the next one is Power Grid Corporation, Kunal, a stock that is on fire today, up as much as 7% as I look at the screen right now. And we've got Chandan from Hubli, who has gotten at levels of 155, which seems to be a very attractive price. Should he hold on for the near to medium term?
Well, absolutely. I think you should definitely look to hold on. Very rarely do you get to see these low beta stocks getting into unison or a cohesive move and providing breakouts on long-term charts. So typically we've seen that whenever that has happened, it's led to a stronger uptick for the entire sector and the set of stocks as well. Would suggest a hold.
Okay, this one is coming from Jayant Rumala, saying, why are the prices of Laurus Labs and Happiest Minds falling with every passing day? Is it time to exit these counters? Kunal, do you think time to exit Laurus and Happiest Minds?
Really, I think these stocks are going through their own patch of consolidation. So, the entire market has been going through this reopening trade in terms of sector rotation. So it's possible that many of these, pathology stocks, etc., these are the stocks which could probably see some bit of profit booking. So it's sort of a routine profit booking which could be, going on to the sector, or some sort of a rotation or churn which could be coming in place. So these stocks may have a silent kind of a phase for the next maybe 1 or 2 months, where these stocks can remain into sideways consolidation. But I don't sense that there should be any kind of a major panic which one should be looking out for these names. So if you bought these stocks at lower levels, then you have a lot of buffer and cushion to hold on. If you're looking to buy, I would suggest that maybe wait for another couple of weeks of these further price corrections as a good level to average.
Okay, the next question, Rajesh, is also on a recent listing. Cartrade Tech is the name of the counter. We've got Sunny, who has gotten at IPO levels, and it's corrected about, I can see significantly since that level. Would you hold on to this, or would you exit? Would you book losses and move to something else?
See, unnecessary booking losses, I won't suggest. I would say hold on to the stock. The company is having a first mover advantage with, and as we discussed in the starting, the auto is going to see a uptick in the coming months because of festival demand. I think Cartrade would be benefited too. So at this point of time, it's a hold.
Okay, this one is from Kaustubh, and he wants a long-term view on Adani Ports. He's saying it is consolidating for some time now. Is it a good stock to continue to hold on to? Rajesh, Adani Ports, do you cover this counter? What should Kaustubh do?
See, one can continue holding to the stock, but adding at this point of time, I won't suggest to anybody, because the valuations are looking a bit stretched, despite the fact that the Mundra port and other ports are doing well. Logistics are going to do well in the longer term, based on the fact that there's a lot of new ventures coming up. I think one can continue holding to the stock which one holds.
All right. On that note, it's time to hit the rapid fire segment. I don't have to tell you guys, there are a lot of queries that have piled up, and we'll try and take as many as possible over the next couple of minutes. I'm going to start with you, Kunal. The name of the stock is Shriram City Finance. Prashant from Kerala is asking whether you would consider getting in at the current level.
Yes, getting in at current levels, and precisely at 2000 levels should be a better level to chip into the stock.
This one is from Chaitanya. He's saying he's bought Kerala at 627 rupees per share 3 months ago. He's saying the brokerages have given a sell call on this counter. Should he believe it, or should he continue to hold on to this stock? What's your take, Rajesh? Fundamentally strong Kerala?
Yes, of course, fundamentally strong counter. They have recently tied up this Biocon and all. I think one should continue to hold to the stock.
Okay, we've got a question on IRCTC. This one is coming in from Ram Kishore. Bought 120 shares at levels of 1367. He's asking what makes this stock rise so much. Rajesh, I don't know if it's a complaint, or I think he's asking, but should he hold on?
Of course, it's a hold. Rather, I would say if somebody's funds are allowing, one can add to that. It's a biggest play on the unlock theme.
Okay, this is from Rajat. He's bought Tata Power at 120 rupees per share. Should he hold or sell, Kunal?
I would suggest a hold, and if possible, look to average it out further.
Okay, Supreme Industries is the next share. Kunal, this one's for you again. Would you suggest that somebody can? I don't know if I can ask you this one. Let me take another one. ICICI Bank. Would you hold or exit? The buy price is 717.
I would suggest to hold on, even though the banking stock is down today. But I believe that Bank Nifty requires a lot of these large cap names to fire up. I would suggest a hold.
This one is from Aman Kumar. Can I buy Bajaj Finance at current levels? What's your take, Rajesh?
Of course, one can buy. The company is doing well, and if somebody wants to be on a safer side, Bajaj Finance would be a better bet because it's a holding company of Bajaj Finance.
All right. On that note, that brings us to the end of the rapid fire segment and indeed to the end of the query segment. It's been a pleasure bringing it to all of you, and I'd like to have a very special thank you given to Kunal as well as Rajesh for being such great sports and for answering all the questions that they did answer today. We're slipping into short break, but do stay tuned. More on the other side.